Hi, I'm Dave Purdy, founder and CEO of Wealth Management Midwest, and we've got our big client event tonight. And our speaker for our client event is Colin Allen from LPL's research department, direct from San Diego, California. He flew in for the event, and he's sitting with me right now to talk about a few things. And we just thought we'd put this out for those of you who can't make the event. You might find it interesting. So I want to introduce Colin. Hey, Colin.
Thank you, Dave.
And say, can you just tell me a little bit about yourself and your role at LPL Financial?
Sure. Yeah. From Boston originally. I've been in San Diego for 8 years. I've been at LPL the entire time. So my focus is helping, educate our advisors and their clients about the markets, with a focus on fixed income. So writing our advisor and client-facing fixed income pieces, and then helping out with the actual investment management of some of the models that we run as a team.
Hey, fantastic. Well, I prepared just a couple of questions, a few questions. And first is, in your view, what's been the primary driver of the stock market so far in 2017? It seems like every day we hit a new high, and we get so many calls here in the office, people wondering what's driving this, and what would you say would be a couple of the things or your feelings?
Yeah, I mean, it's been a couple things, right? So post-election, at the tail end of 2016 and into 2017, you did see some of those kind of animal spirits, more kind of ethereal drivers of markets and that reflation trade, and people kind of just betting on higher growth and higher inflation because of President Trump and kind of how he is going to run the country. And we've seen that really kind of transition into actually corporate America driving markets higher. That's been higher higher profit growth, higher earnings growth, and really with a focus on top line growth rather than just the cost cutting that we've seen for the past few years.
Wow, interesting. And then, we've seen a lot of impressive earnings growth so far this year, and stocks have gone up. It seems like a lot of these big companies, let's say it was Amazon, they're having these big earnings. What pushes the stock market higher from here? I mean, it seems like it's had such a run. What is it going to take to have it go even higher? Or what's your feeling for that?
Yeah, I mean, we think that, not to sound like a broken record, but we think that earnings growth will continue into 2018. We think corporate America is strong fundamentally and poised to do well next year. So we think that we can get gains in the stock market without having kind of any expansion in multiples and making valuations even richer. We think that profit growth and earnings growth can really drive this market higher from here.
Wow. Well, it seems like stocks so far this year, and out of my 29 years in the business, it seems like the volatility is almost next to nothing. And I remember, for years, I mean, it had these moves in the markets would go like this, and now it's almost just kind of steady. What's the volatility? Do you expect to be a more volatile market coming up here in the future, or what's your feeling on that?
We do, and we've expected it for a little while, since kind of late summer, and you haven't really seen it. It's been a very subdued market, and a lot of this is kind of a continuation of the Fed-driven market that we've seen since the Great Recession. But we do think that this will pick up, especially as the Fed raises short-term interest rates at a gradual pace. As they roll off their balance sheet, slowly whittle that away. We do think that'll bias volatility upwards. We're not expecting a tremendous increase, but we do think higher from here heading into next year.
Wow, and one final question is kind of when you look through your eyes to 2018, which really isn't that far from here,
right,
and you kind of think about these markets and where we are. What are you thinking about? What are like concerning you, or what are you thinking about like 2018? That would be maybe positive and or negative or status quo for the markets next year?
Yeah, I mean, so thinking, positives, like we said, corporate America is doing well. The global economy is doing well. It's kind of a kind of tide that's rising all boats in terms of economically globally. So I think on the negative side, it's a policy mistake could happen. That could be. If you don't get any tax cuts in, we expect that in very late 2017 or early 2018. If you don't get any of that at all, then you can see markets kind of trade back down, because a lot of that is priced in the markets at this point. And then that could be a global thing as well. You could see the European Central Bank be too aggressive with tapering their bond purchases, which could add volatility to the market. Bank of China, the Chinese government could try to solve their debt problem too quickly and kind of clamp down on their growth and thus global growth. So I think policy mistake is the biggest risk going into next year.
Great. Well, just want to thank you very much for taking a few minutes to visit with us. And for those of you who can't be with us for the presentation tonight, feel free to call me, and I'd be happy to give you a full report on Colin and the presentation. And thanks for watching.
Thank you, Dave.
Thanks.